All right, good morning, everybody. Hope you're all having yourselves a fantastic, fantastic start to the day here. Looks like my screen's a little bit off. Hopefully that looks better. Let me just sanity check here. All right, cool. Looks fine. Hopefully you have yourselves a fantastic weekend. Feel refreshed, recharged, right? And hopefully ready to go here as we get up to sort of the final stretch before election season really kicks off. Really interesting to see how markets are going to behave here for us this week. We have a pretty interesting week ahead of us, right? We've got quite a few names here reporting earnings. So Microsoft, right, reporting earnings this week. I think Apple as well, right, reporting earnings this week here. So I think there's like 3 of the 7 magnificent 7 names are reporting here, right, this week. So, I mean, so many of our scenarios, right, already Apple, Microsoft, Amazon, AMD, right, Meta, all reporting here this week. Even, I think, even a Google, I think, right, reporting here. So very significant, right, amount of quote unquote headline risk, right, as we creep up towards each individual earnings event. But we also need to realize that, markets have kind of stomached, right, or taken on the earnings here relatively reasonably well for some of our leading names, right? So Netflix had a pretty good reaction post earnings. Tesla had a pretty good reaction here to earnings. So maybe that's our slight warning sign, right? That the market is kind of eating that up relatively well. So that then compounds, right, into a couple things. In general, markets are forward-looking instruments, and markets kind of value certainty, right? So when we have a clear mandate from the Fed, right? Okay, we're not going to cut rates until inflation is at XYZ. Even though that maybe isn't a very fair reflection of the economy, that makes it easy for markets to go up because that narrative is consistent. As we now creep up into earnings season, getting a little bit crazy, and then obviously the election kind of coming into force, we have ourselves a scenario where we're dealing with a lot of uncertainty in the markets, right? And so when markets are uncertain, that generally creates scenarios of kind of choppy conditions, right? Challenging price action. And everything that I've seen here in the run up to the election is going to suggest that it's probably going to be a one day up, one day down, right? One candle up, one candle down type market until we basically get that certainty in markets again. So it's not going to be like a 10-day trend. It's probably going to be more micro trends here over the next couple days. And that is going to be my base assumption, right? Until I get some sort of proven otherwise type scenario, right? So what I'm looking for here today is to get a strong indication of, we'll call it localized momentum. And then once we identify those conditions and we can take advantage of that market, hopefully we can put ourselves in a situation where we can continue, to really take advantage of the oomph that we've established here in the last week or so. With that being said, right, the last 11, maybe 12 trading days here at this point have been fantastic. They've been good base hit days, nice little win streak here, right? 11 green days in a row. I think 11 out of 13 days with 2 days not trading. So that's pretty good. That's nearly 3 weeks of just green, and doesn't mean that it's necessarily going to continue. Doesn't necessarily mean that it's going to end here, right? But just as a reminder that the win streak has been successful, and or we've put ourselves in that situation here because we've been behaving as if that next loss is right around the corner, right? So we haven't been increasing our position sizing. We haven't been getting greedier with the size of our wins. We haven't been hunting or chasing after subpar trades. We've been trusting our setups. We've been thinking about our risk management, and we've been working backwards to find our ideal entry prices. There's been no chasing. There's been no BS. There's been none of that kind of stuff. And we've allowed our basic technique, right, to put us in situations where it's easy to be green, and we've kept price action objective so that we can trust our analysis, right? We can kind of take profit off when it's appropriate, and we haven't gotten emotionally attached to our P&L. So if those are the things that have made us successful here, right, over the last 3 weeks or so, then why would we change anything here today, right? Why would we skip those steps here today? Why would we rush a technique that isn't there? Why would we start to ignore stop losses? Why would we chase entries outside of our risk reward zone? Why would we do any of those things, right? So when we establish ourselves a nice little period here or a good run of form, that is just a reminder that our brains historically want to then trick us into doing what feels easiest, right? Because our stuff doesn't stink no more, right? And we have to default into doing what is most profitable, not what feels best. And the difference between what feels best and what is most profitable is significantly different. And so we just can't fall for that trap, right? That trick, that whatever you want to call it, right? And pretend as if this time is going to be different if I break my rules. So trading is ultimately a game of probabilities. And the only way that we survive the pros and the cons, right, of those probabilities is by being consistent when times are good and by being consistent when times are bad. And we've seen both extremes, right, of that here over the last, we'll say, 2 months or so. We had a great end of the summer, a bit of a challenging 5 or 6 days, and then a nice little run of form here again. And ultimately, right, we haven't changed our process. We haven't changed our technique. We haven't changed our psychology. We haven't changed our position sizing. We haven't changed our stop loss. We haven't changed our entry technique. It's all been the same, right? And so it's that reminder that that element of consistency is ultimately a bigger driver of success than it is to overreact and panic, right, and change everything after a day or two, right, of challenging conditions or challenging markets. So with that being said, that's the sort of Monday rant out of the way. Hope you're all having yourselves a fantastic start to the day, and let's get after it. So first things first, right, economic calendar here this morning, relatively quiet here. We're in the Fed blackout period, right, as we creep up towards next week. So I don't see any Fed speakers here today or any this week. Should sanity check that. So see none today, right? Pretty clear docket. So let's see how it shapes up. But let's start mapping things out here. Let's figure out what we want to do, and let's actually crush today's trading session. So good morning, Suresh, Cordell, Craig, JK, Raim, Steven, Jeff, Brett, Brian, Samuel, Devin, Salstein, Tanja, Nate, Bugs, Howell, Patrick, John, and Jeremy. Hope you're all having yourselves a fantastic start to the AM. Had a refreshing and recharging weekend and are ready to go. And I'd agree, Patrick, right? It's a consistent, repeatable process that leads to home runs, not by swinging harder. So the more consistent we can be with that approach, then the sooner we're going to start to compound into what feels like home runs, right? You get on base enough times here, eventually you're going to hit that grand slam. And what we focus on, right, what we size our positions for is getting on base. And then when we get that follow through, right, we can really take advantage of some of those moves. So first things first here, team, what's the count on ES? Let's start there. Yeah, so it's a 2 out of 3 here to the downside with volume spot on, right? Rejected or retested that trend line and then made or broke down, right? Still made higher highs, still made higher lows. So potential signs, right, of maybe some bearish capitulation right? And we have maybe some indication, right, of some trending PA. But the fact that we faked out, right, above previous highs, couldn't hold those, maybe not the most optimistic reason. And then we're opening up in the implied middle, right, give or take, of Friday's range. So again, that generally creates reasons to be cautious for us, right, going forward. So to the upside, right, we could possibly, there we go, possibly play a breakout towards 5,900, right, and above, just because we do have some bullish characteristics here. We've got a relatively bullish narrative on many of our tickers. So I would have that in play. It would have to be on bigger vol than yesterday. And then a rejection off of 5,900, right, would maybe be the easiest scenario here for that downside case, because we've seen that trend line, right, act as support multiple times here in the last, say, week or so. So if I can get a breakdown from there, right, and then push down towards 58.60, we've got it pretty nicely mapped out at that area. So do have some flexibility here in both directions. Less flexibility to the upside, right, because we're going to require a stricter volume standard, but certainly is in play here today if we get a consistent narrative across the boards. All right. NQ, what's the count? Yeah, 3 out of 3 here to the upside with volume. All right, so maybe it's starting to show us that it wants to behave a bit more like a leading name here. And then here's maybe like your trend line support. It's a nice little bounce off that trend line. Like a little ascending wedge breakout over 2,700 might be the sort of scenario we're going to fall in love with here. Something like that. So we're looking for, I mean, this is a 3 for 3 here to the upside. Would love to see it get past 27, right? Dip by maybe off of 24, I could see being realistic here. Right, if I'm looking at, if I'm going to draw a box, like inside this immediate range, I've got more evidence of this box being a dip buyer box than a sell-off box, right? Since, say, the beginning of October 9th, so, okay, 2 weeks ago. Pretty much every time we sell off into that, bar one example, ends up being a dip buy scenario. So if I see that happen here again, kind of seems like the balance of probabilities this here to the upside. The rejection, right, would be from, say, that 2,700 back down towards those lows. But if I'm going to be bearish, I'd rather just play, right, that ES, right, versus NQ. So bull case, more of a bias here this morning. I'm going to say to the downside, NA, focus on ES. Bull case, easier on NQ, so I'd rather just do that. Does that make sense? All right, sweet. So crude selling off here quite a bit this morning. Someone on Twitter the other day was asking me about if crude could hit 67. Seems like they nailed it, right? Inside bar, big gap down. Yeah, the size of that gap down maybe makes you start to feel like it could be a bit of a reversal scenario, right? Where that move has kind of happened overnight to a certain extent. So, spot on there, Rain. Nailed it. And we're going to say bounce off of like 67, 67.50. Hey, Steven. Welcome, man. Great to see you in here. So say 67.50 / 70 as our dip buy, right? And then a breakout back up towards, say, 69. And then we'll go like 69.50, nice, 70, 70, 50, 71, 71.50. And then to the downside, probably need to get under this 65 shelf, right? This is kind of a big area. 65.50. Something along those lines. I'm going to trust it. I ideally need to see bigger volume. We'll say rejection off of... I mean, I would need to see that fill that gap. So fake out around 70, then break down towards 65. I'm less optimistic here about the downside, just because limited bearish volume, kind of an overreaction gap down. This kind of feels like a spot where it's just going to be a lot of algo buyers to start the day off. So we'll see if that ends up being the case, but that would be, if I had to flip a coin here without seeing price action, that would be maybe more my bias. Generally, a big gap down on decreasing volume just feels like an overreaction, right? So I want to make sure that I'm not chasing that here too much. And we'll see if we can go from there. All right. Apple, 3 for 3 here to the upside. Kind of a little bit NQ-y, right? Where it's not the greatest looking 3 for 3, maybe getting a little bit stuck at some possible resistance. So we'd like to see it break out through that range prior to us being particularly aggressive. I still have that 237.50 as being that spot. I'm not sure if I'm seeing anything that really invalidates Wednesday's price action here yet either. So let's at least get above that range before we do anything aggressive. And then because it is a 3 for 3, it's just going to be an NA here to the downside. Again, kind of seems like tech maybe a bit more roaring to go, which would push us to a little bit more of a bullish bias on NQ, right, like we already have. And we'll see if it has that juice. All right, Tesla, 2 out of 3 here to the upside without volume, right? So trending price action here to the upside. Pretty good volume. Not expecting it to have been bigger than post earnings. So it does make sense that it's decreasing. And certainly looks like it wants to break out past this 270 shelf here. So say 271 shelf, right, for a continuation move. So 271 or gap fill and go pretty much, right? And gap fill and go would be like a bounce off of 270, right? And then climb higher. Okay, Microsoft going into earnings on Wednesday. Technically a 3 for 3 here to the upside. Higher high, higher low. Not a great looking combo here. But again, right, a very consistent narrative pretty much across the board this AM. We're going to look for a 433 breakout this morning. And until I see bears being able to sustain some of this momentum, I've got no reason to be particularly bearish. Good morning, Brian. All right, Amazon, 2 out of 3 here to the ups, or sorry, to the downside with volume. So maybe a little bit of a rejection scenario here. Kind of got like a little bit of a trend line there, right? Call it a bit of a wedge, right, at this point. And pattern consolidation going into earnings makes sense. I'd be looking for a 191.50 breakout here to the upside. And then the bias here, right, would be a retest of the trend line and then a breakdown to kind of fill that gap towards like 186. Okay. AMD, 3 for 3 here to the upside, going into earnings tomorrow. So I'm going to sit this one out. Good morning, Kenneth. But again, a weak 3 for 3 here. I'm just going to go NA. Excuse me. If you hear a particularly devastated tone in my voice here this morning. Simply because today was the first day under zero, and I promise it's just the seasonal depression hitting hard, not the markets. Nvidia, so a little 3 for 3 here to the upside. Not a fantastic amount of volume, probably the most pathetic of the volume standards, right, that we've seen here this AM. It's disgusting, Rusty. I agree. All right, you don't have to rub it in. We're going to look for a 145 breakout here. And then, yeah, bear case, still probably need to break down under this trend line support. Okay, Meta, earnings on Wednesday, so still probably a day here. We need to get up over 585, so still hasn't changed from that perspective. And this kind of looks like ES, right? Where it's a higher high, higher low, right? Increasing outlier volume candle, but it's kind of got some like bullish characteristics, even though maybe there's some like quote unquote bearish momentum here, like on a technical perspective, right? Probably a bit more of a bearish bias. Contextually, maybe a little bit more of a bullish bias. So we'd like to see a cleaner resolution to basically establish trending PA. And then a trend line rejection could set us up for that gap fill scenario, which would be towards like 169. Okay, Netflix. Still continuing to consolidate inside that Friday range, right? Can't really break out above and sustain those moves. Can't really break down under. It kind of just looks stuck, right? So a pop above, say, 775 is going to be the starting point here for me. And then a breakdown has to be under Friday's lows, right? We're just continually confined inside that space. So let's see if we can get some oomph here before we're aggressive. All right, and then Google. This is probably the most significant of the gap ups here. Going into earnings tomorrow, this is setting up as like a Bollinger Band reversal setup, right? Kind of the opposite of crude. So let's see how it goes. And then VIX, right, hanging out 1911. So obviously a decent amount of volatility, right, available to us here today. I imagine that we're going to be in and around this handle, right, for the next 2 weeks easily, until we get some sort of resolution here. So it should create some follow through, right, if we are able to get some clean trending price action. But we do want to make sure, right, that these narratives basically sync up and become consistent here today, right? If we're seeing weak bears, right, let's see them fail, get knocked out, and then take advantage of NQ. If we're seeing tech get crushed, right, maybe as it's a positioning for the earnings play tomorrow, let's see then basically an ES setup for us that we can take advantage of. So we do have scenarios in both directions here, which does give me some base expectation that today could be an interesting session. But I'm not going to rush anything, right? I'm not going to force anything. I'm going to trade my system. I'm going to trade my technique. And I'm not going to allow price action to feel personal here today, right? It is by controlling the variables I can control, which is my risk management, which is my entry timing, which is my position sizing, which is when I close trades, right? When I open trades. It's by obsessing over those techniques, over those variables, that I'm ultimately going to set myself up to be more successful than I could ever desire, right? It's when I start to skip those steps and try to optimize for a short-term P&L that I tend to elongate the path towards getting towards my goals. So the challenge I would set for everyone here today, right, is to obviously set goals for yourself, be ambitious, be, bold and brave with what you're targeting, but don't allow those pressures to trick you into doing something that is actually suboptimal or not going to get you there just because it feels like it might get you there sooner. So that's always a trap, right? When we try to optimize decisions to maximize P&L on a short-term basis, all we do is make it harder for ourselves to actually get the P&L we want on a long-term basis. And we all have evidence of that inside our trading. We've all struggled with that here in the past. It's kind of like a universal truth for us traders. And so I would challenge you all, right, to be very accountable to yourselves for that. One thing I also want to mention here, so this is something that I've gotten a little bit of feedback on, or I've been kind of giving feedback on over the last little bit, is when we, like, if your objective is to copy my trades, awesome, right? I have no problems with that. Copy away. But I want to also highlight that there's a difference between copying my trades, right, and chasing my trades. So if you're waiting to hear me say that I'm in a position, and then you're entering a trade once you hear that I'm in, you're no longer copying my trade, right? At that point, you're chasing my idea, and you're not setting yourself up to be profitable. So if your goal is to copy me and to get the same entry, well, I always tell you what my price is, right? So if you're 3 seconds behind and you get say I'm playing a ES breakout at 7:15 and you get it now at 7:27, well, now when we're right, you're going to make less money. And when we're wrong, you're going to lose more money. And so fundamentally at that point, you're no longer copying my idea. You're no longer trading the same thesis as I am. You're trading something a little bit different. So if your objective, right, is to replicate my entries, then when I say my entry price, wait for that pullback to retest that entry price and then click submit, right? Or if you want to do something even better, right, wait for a deeper pullback through that zone and get a better entry price than me. So if your goal, right, if you're the way that you're trading is you're waiting for me to say that I'm in a position and then you're jumping in, please don't jump in outside of those risk reward zones. Please don't jump in at a worse price, because then at that point, you're no longer setting yourself up, right, to actually be successful. Good morning, Sammy. So if that's what your target is, or that's what your objective is, again, like I said, no issues with that. But let's make sure, right? I'm still here, Oz. I'm still here. Just to make sure, right, that we are being deliberate with that entry price, right? So I'm being deliberate with my entry price. And I would ask that you all do the same thing as well, right? Because you will see a tremendous amount of more performance by just waiting for that extra retest. And it's very rare that price action doesn't give you a chance to re-enter at that price or better. So don't feel as if you have to chase it, right? So we have a minute here till market open. Now it's time for some coffee. I'm going to go make myself a quick cup of coffee, spend a few minutes visualizing a successful trading day, and then we'll jump back on here and hopefully crush this Monday session. So looking forward to it, team. Be back in a minute, and we'll have ourselves a great day then. Be right back. All right, so I'm back. Yeah. And by the way, guys, if you're a DTR guest, right, you're saying you're checking us out for the first time, or you've been with us here for the last couple days. Good morning. Hope you're all having yourselves a fantastic day. Please don't hesitate to ask questions. My objective here is to try to help. I'm trying to be as transparent as I possibly can be with my trading. So if something doesn't make sense, or you don't understand why I'm looking at something, or whatever the variable might be, please let me know, and I will do my best to try to answer that question right before it basically becomes anything significant. So my preference would be to answer that right away. Generally, when questions linger, then that becomes confusion, and if we can solve something immediately or in the moment, that ends up being a slightly better outcome here long term. So David, if you're in the stream, good morning, man. Hope you're having yourselves a fantastic day. Everyone else, right? Hope you're also having yourselves a strong session. And yeah, for the new members, right, who joined here on Friday, welcome to the team. Excited to have you, and let's have a pretty awesome week here, team. I'm looking forward to it. Hey, Joe. So far, so slow. Nothing too crazy. Maybe crude, the more tradable opportunity here. Good morning, Herschel. Excuse me. So again, right, if we get a bearish breakdown here across the board, probably a little bit of an easier ES trade. If we have a strong bullish scenario, right, today's probably a little bit of an easier NQ trade. So let's see how she comes together today. And if it's slow, no worries, right? Mondays aren't always the busiest of days. Now, today, with like a limited economic calendar, literally nothing on the docket, maybe that's a slightly smoother scenario for us here today. But we'll see how she goes. Been a while since we've had a day without any Fed speakers. So it'd be great to take advantage of that. But let's see how it comes together. Good morning, Ruben. Ooh. In theory, could play crude here. Oops, wrong one. I don't know if it's worth the round trip, to be honest. Targeting a move of 20 cents. Just be patient. I'm just gonna go grab a jumper. I'll be right back. back in business here. Oh, it's so sad how cold it's getting. All right, so maybe starting to see a little bit of some downside pressure and momentum, right? Relatively consistent selling off so far this AM. VIX, maybe the lone exception, as that's creeped down just a little bit. We were at, like I said, 1911, right, to start the day off. Now we're at 1904. Not a significant, we'll call it personality change here, right, to really be influenced by that. But certainly sets things up. So ES, right, looking like the most likely opportunity here so far. So let's start watching this here, see how it behaves. Eight seconds to go. It's got to close under previous low of day. So might not do it on this time frame. So we'll be watching this on the 5. And Q didn't want to do it either. And then crude. Not really moved much either, right? So we're so far so patient. Definitely a good volume profile, but if those bears were strong, why couldn't we make and hold a lower low? Right? Definitely some reasons to be called pessimistic, right, about that quality of the price action. Higher high, higher low. The aspect that crude is giving me is driving me nuts. How was everyone's weekend? Well, it doesn't really work like that, Jeff, right? Because there's no gap in futures from a technical perspective, right? So like if you set your session to be electronic hours, it's not really a gap, right? Because it opens where it previously closed. Yeah, I was not going to say anything too bad about the Cowboys here, Dwayne. I'll let my biases show. All right, so now we're making a lower low here. Yeah, Aria, good question. So, talked about this a little bit to start the session off, but in general, markets are like forward looking, right? So when they are forward looking, they're looking for a consistent narrative here into the future. And like that's probably why we saw them climb, right, in this quote unquote high inflation environment, because the Fed was being very transparent with what they were trying to do, right, with cutting rates, with what they needed to see from a data perspective. And so that made it easy, right, for the story to be consistent. And so you were able to get a pretty tremendous amount of follow through, right, based on that consistency. With now us creeping up towards the election, we're kind of in like peak uncertainty, right? Pair that with all the earnings that we are establishing here today, or this week, I should say, sorry. And that kind of sets us up to have a slightly more uncertain environment, right? So I think it would be challenging to expect that we're going to get 7 days of green or 7 days of red, right? In one direction. It's probably going to be more micro trends where there's like 1 day up, 1 day down, 1 day up, 1 day down, as we kind of react, right, to each individual bout of news that essentially comes through the docket. So from a volatility perspective, I would anticipate the ranges to be pretty big. We'll see if the VIX continues to climb back up above 20 to basically confirm some of those narratives. But I think we're going to have a relatively bouncy market here in the next, say, 2 weeks or so. And yeah, challenging for us to get a tremendous amount of like multi-day trends. Yeah, so where are you seeing the green arrow up? What all that does, right? So if we look at this is FOBRK is fake out breakout. So it's just a way of visualizing that. You can turn off the arrows by going into the style, and it'll say, okay, if you have a bullish arrow here to the upside, and then a fake out below that, right? You're basically saying I've got buyers that open, and then fake out under those buyers tells me that buyers are still in control. That's kind of what it tells you. It's a way of visualizing this low vol fake out setup that we trade here in the ORB logic. Basically just coded it up so I could visualize that and backtest that idea properly. I don't particularly use that indicator very often on a day-to-day basis. It is available to you, but it's not something I really rely on. So all it does is it says, okay, we made a new lower low. We weren't able to close at lower lows, right? So we have a reversal candle on increasing volume. That's generally what it's signifying. Okay, so still not really anything in play here yet. Decreasing volume on ES. Yeah, no worries at all. Crude, we haven't missed out anything on. So, okay, so far so good being patient here. And then VIX kind of back up towards its open price of 1912 now, so one tick above open. But we need to see volume show up here, right? We need to see volume show up. We've got a relatively big opening range on the 3-min, decent size opening range on the 5, right? So same range on the 3, 5, and 10. So we've got plenty of space, right? Nearly 20 points of space here to the downside. So we don't need to rush this decision here. We can wait for that volume. We can be confident we're going to get good risk-reward ratios. So no reason to rush anything here. Okay, so again, right, possibly an opportunity for a little fake out reversal here on NQ. We need to see a more impressive volume standard before I'm willing to be aggressive here. And then no 10 a.m. data this morning, right? It's a relatively clear and free economic calendar. So let's see how she comes together. All right, so it's increasing volume, but it's not outlier volume there on ES, right? So I'm going to stay away from that. There's a possible reversal scenario. It's decreasing, but outlier volume on NQ. So again, no real clear indication that I have really element of trending PA or like that momentum shift here yet. So again, remaining relatively cautious here. Same thing with CL, no real increasing volume standard. And that perspective is driving me just a little bit nuts this morning. Man, it's cold. Yeah, probably. Give it a little bit of flexibility. It's hard to leave friends and family though, Joe, to be honest. Ain't that the truth, Greg? Ain't that the truth? Might not snow yet, but it's coming. I'm in Montreal. So not too far. I don't know if Callum's in the stream, but he is for sure. So he does the digital nomad life pretty well. Okay, NQ starting to break down. See how ES does. It'll be close from a volume standard. Good, not perfect. It's increasing, not quite outlier, just under that cusp. And Q giving me that bear volume, which is annoying. Alright, see if this 5-man can give me that candle. Yeah, great question, Alan. So, no, Juan, I won't, right? My plan here on NQ says bearish NA, focus on ES, so I won't change that. So all this is, this is just the trading view clock. In my OBS settings, all I've done is basically capture that window and crop it in so only that element is visible, and then overlaid it on my OBS chart so that everyone can see the time. So in general, right, NQ was a 3 for 3 here to the upside. So I have less reasons, right, to want to be bearish. If that's the case, right, it's kind of like a short-term counter trend trade. Whereas ES, right, a little bit of an easier scenario where I can trade this here to the downside and the upside. Yeah, in general, the YouTube latency should be about 3 seconds. So that's what they advertise as their ultra low latency settings. Any latency that you have greater than that is going to be based on your specific internet connection. What you want to make sure is that the little live, so there should be like a window there where it says live. You want to make sure that there's a red dot available there or visualized there. Because anytime you buffer or anything along those lines, right, that's where you'll start to see a little bit of that extra latency compound. Again, right, not seeing a tremendous amount of sustained volume or follow through here. So I just have to be a little bit patient and cautious this morning. If it's going to be a slow grind lower, doesn't really give me much of an edge to trade that. If I could get a high volume reversal, then cool. That starts to get interesting, but I don't have that scenario in play here yet. Yeah, so we did a good job not going after this 3-min signal. Five-min again, not increasing or outlier. So yeah, so far so patient here, right? No real clean edge yet this morning. So it's a sip your coffee and watch AM here so far. Still nothing. Feels just like a general lack of enthusiasm here so far today. Let's see if we got some juice. And it's pretty poor volume so far, right across the board on our indexes. So far, so patient. I know I talk about this all the time, but my second most profitable position, right, is sitting on hands. So if I don't get a trade here today, no harm, no foul, right? Market doesn't owe me that for sure. Yeah, Alan, so you want to be looking at the December contract? That's the one we're looking at here at the moment. Again, non-outlier volume here. Better on NQ here to the upside. It's kind of like a relative term. Yeah, kind of a grind or a slog of price action here so far. So the reversal scenario would be the most appealing. Couple fake outs lower, bullish engulfing candle, bullish engulfing on volume. So we've got a couple failed breakdowns, right? So stop loss would have to be 20,551.50. Okay, and this would be a one contract play, right? On a pullback under 69.25. We want to see a tick by tick pullback, right? So thinking that we maybe are going to get this on this time frame might be a little bit challenging here. 7 points away, 10 points away now. This would be one contract, right? So let's see if we can get a little pullback here. That's too fast. That's too fast of a pullback. Far too fast. Let's try this again. We kind of had some stairs down there for a second, and then it's like I got tired of taking the stairs and wanted to take the elevator. I don't really know how to answer that, Antonin. Because when I started to look for an entry, it gave me that flush, right? So I don't really know how to answer that question. Like, it just didn't behave the way I wanted, so I didn't get in. Like, it's not it's not like I'm watching it with a stop clock or something like that, or stopwatch, thinking, oh my gosh, it's got to do this, it's got to do that. It's not that like, yeah, it's not like that, right? But you can kind of just, like if it moves up, right, 10 points from your entry price, and then it pulls back 15 points, you kind of know it's not maybe giving you the ultimate reaction, right? So again, let's see if we can see that elevator up above that 69.25, right? And then a slow pullback back in. It's wanted to have shaken out maybe some weak bulls here so far. So let's see if it's got the juice. Again, that's a bit of a rejection, maybe a little bit too fast. Which number, April? Like this white one here or that green one there? Is that what you mean? Okay, so starting to watch here again, team. Starting to watch here again. We want to see a tick by tick pullback. So that's the number of contracts traded on that candle. Okay, so watching closely here. All right, so I am in one contract at 25.68. Stop at 51. And it's one contract, right? Okay, maybe a little bit early on my entry here. Where's my piece of paper? Okay, so let's see if this thing has legs here, right, to push. If it doesn't, I'm going to look to just get out and take the small win. But we'd like to see it break out above that 79 resistance here, right, with some enthusiasm. Otherwise, I'll take the 50 bucks. Slightly early on my entry, right, so... Again, if I'm not green right away, what else am I wrong about? So we'd like to get some immediate follow through here. Otherwise, again, if I take a small win or a small loss, it's fine, right? If I can gamify losing less than I anticipated, that is a good outcome. Now let's see if this thing can push and break out, right, through that 80 handle. That's what we need to see clear. Yeah, so Joe, you probably have delayed market data. That's what it sounds like to me. Where you probably have a little D up here in the top right-hand corner. So I would please make sure that you sort that out and go through the FAQ section, right, to be able to sign up for the correct market data. Can't trade with delayed data. Does not work. Okay, so needs to clear through this 580 team, needs to clear through. Okay, so now we hit 581, right? So we don't want to see this 580 really flush through. So needs to hold here above. Decreasing volumes, maybe a little bit pessimistic here. Right, if I'm thinking about what the perfect reaction is post-entry, I would have seen an increasing volume standard. So that's reasons to be a little bit pessimistic here about it having momentum to now break out through 2600. So let's see if this thing can keep climbing. But a good start here, team. Definitely a good start. That's $500 on the day here so far. Right? Cannot complain about that. But my biggest concern, right, is that the lack of general enthusiasm maybe means that this won't have as much follow through as I would hope, right? So we want to now watch this reaction around that 2600. And again, right, not get too emotionally attached to this position. It's a bit of a rejection. Come on, bounce back here, you lunatic. This candle closes under 580. I will get out. Starting to feel like maybe that's the better move here at the moment. Good entry, Derek. Great entry. So needs to hold above 80 here, team. Needs to hold out at 80. It's not doing so. Okay, so I'm closing this trade here. I'm out. Closed at 575. Not the right reaction, right? Not the correct reaction. So, notes I have here, right? Not the right reaction post-entry. Volume was decreasing, right? After entry candle. And then bad reaction at 600, right? So we got stuffed at 594.25. Not exactly particularly bullish feeling, right? That we have decreasing volume, find resistance, and then can't break out through that range. So I'll take a little win. I'm not going to complain about 150 bucks. But market wasn't moving the way that I wanted. So again, if this thing sets up on a longer time frame, I can try again. But don't have that easy scenario here in play. So again, if this trade is strong, right, it'll give us more than one chance to enter. And we don't have to have any FOMO about it being at 85 here or anything along those lines, right? This little pullback into 57 would have made you feel terrible. So don't make it personal, right? Don't trick yourself into thinking that this would have been some, XYZ, right? Whatever you want to call it. Control the variables we can control. Well done, Steven. You should be thrilled, man. That's a fantastic result. Congratulations. So now that that's the case, right, I would recommend walking away for the day. Make sure that that's the result you finish with, right? No need to gamble for more. Just let yourself sign that all those forms. And then you can set back up tomorrow. And truth be told, you're not getting a crazy market here yet, right? So, no rush, right? No rush. Sounds good, Greg. Enjoy, man. It's okay. I have no issues, right, with how I closed that trade. Okay, maybe I could have gotten a few points higher. Maybe I could have gotten a few points lower. It's kind of irrelevant, right? Once the move stops behaving the way that I expect, I then kind of admit to myself subconsciously, right, that I need to get lucky to be profitable. So once I've admitted to myself that I need luck to bail me out, that's my reason to get out of a trade, right? I don't want to reward that lucky mechanism and get addicted to that feeling, because then when things get unlucky, right, it feels personal. It feels like I can get bailed out with a bounce that maybe isn't reasonable. And I start to reward something, right, that isn't, just isn't realistic. So, okay. Wish I closed it at 94. Fine. Didn't. But followed my plan, trusted my thesis, made a few dollars. It's worse scenarios in life. Right? Controlled my variables. And so today, good base hit to start the week. We'll see if we can keep compounding from here. Does that make sense? And the thing that probably also, right, compounds here a little bit is I wrote down in my notes, right? Slightly early entry, pulled back after I entered. So again, right, if my point where I'm thinking, hey, this is where support needs to hold, it doesn't hold that area immediately at entry, well, all of a sudden, right, that weakness is going to start to show up in other elements of the trade. So talk about all the time, right? My strongest trades are the ones where I'm green right away. Right, or within a reasonable context, right, green right away. That pulled back within how much of stopping me out, right, of 2 points of stopping me out before it then made higher highs. So kind of telling me, right, that maybe my thesis wasn't as strong as I wanted. And so again, right, not going to get emotionally attached to that. I'm going to take the clues that the market is giving me and just not make the P&L personal, right? Good process leads to a good P&L. Bad process leads to huge ups, right? Huge swings, but then also huge lows. And when we start to ride that roller coaster, good luck getting off, right? It becomes really challenging. You have to lose a tremendous amount of money, get your butt kicked so many times that you are willing to jump off that ride. And then that becomes a very painful and expensive lesson to overcome. We don't want to be that trader, right? We want to be the trader that is obsessing over remaining in control, because when we remain in control over our decisions, then our P&L takes care of itself. But if we start to basically start to rush processes, right, and we start to skip steps, and we start to be like, okay, my P&L is telling me this, or my P&L is making me feel like that, I'm screwed, right? Congratulations, Steven. You should be thrilled, man. Getting that second eval passed is a fantastic step towards that level of consistency. So now let's get you to some payouts, man. That's when it starts to get fun. Congratulations. You should be thrilled. And welcome to the team. So it's a choice, team, right? To get off of that P&L roller coaster, to make decisions where you're optimizing for staying in control, right? For optimizing for protecting your mental capital, for doing all sorts of those things. And when you do that, right, P&L will take care of itself because it is the trader that remains in control that doesn't make any dumb mistakes, right? And basically, if we just avoided 99% of our dumb mistakes, we'd all be in a much better position from a P&L perspective. So we're not trying to beat the market. We're trying to not beat ourselves. And the only way that we can consistently do that is if we make our trading decisions binary, right? Either it gives me that strong reaction, either I'm green right away, either it holds 58.80, either it does whatever, right? Where it then becomes a very easy fork in the road. And the more that we can basically behave within those contexts, the better our trading goes. So we've not missed out on anything here, right? Honestly, not at all. So for now, I'm being really, really patient and cautious, and just not in a rush to force anything. If we get that breakout over 600 on some volume, we could absolutely be back in play here for that continuation, right? Maybe up towards that 2R range, like that 2700 zone. But for now, no reasons to front run that breakout. So sounds like you were you doing that through TradingView, Oz? And what I would say, right? Don't try to, if you make a mistake, don't try to trade that back just to make back, right, that P&L. Wait for your next A+ setup to make that back, because what's going to happen here eventually is you're going to get used to that being an option where you're constantly getting rewarded, right, for basically recovering your P&L with kind of scalping trades like that. And then you're just going to dig yourself a deeper grave, right? So if you make a mistake, take it on the chin, write down how you made it and how you can avoid it in the future. But then don't try to like trade back your P&L to make it back immediately, because that's a very easy way to get back on tilt. So what you likely did there is you had like your ticker set at your stop loss price, right? And then as you changed your entry price, that ratio that was locked changed. So think about your execution process. There's something there that was a little bit flawed, and it didn't need to have been that way. Yeah, we took a little trade here on NQ, nothing really significant. So if I'm just going to log into my paper trading account, you'll be able to see my order window here, right? Hypothetically, let's say I'm playing a breakout to 25.75. Okay, so price, set your stop loss. Want your price to be 25.70.75. If I leave that there, right, and then start to change my entry price, looks fine, right? If I let that to be ticks, then I start to change my stop loss price to be something different. So we want to make sure, right, that we're setting our price not as a dollar figure, not as a ticks, but as the actual specific price, and then going from there. So you likely had your clicked off on ticks or on USD. And so then when you changed your price, right, it changed your stop loss price, right, to match that variable. Whereas you want to make sure, right, that you're setting your stop loss price to be, okay, 70, 75, we'll say, right, and then changing your price or your position sizing, right, to account for that difference. So got to make sure you have the right thing ticked. Again, this should be something that you guys have all figured out already by now with your execution timing and software. There are no excuses to essentially make those types of execution issues, right? Those are unnecessary self-inflicted wounds. And we should have a basic understanding of how this platform works at this point, right? And we should also be double checking our orders before we place them. So if you're looking to enter a price and you're not checking your stop loss before you click submit, you're just setting yourself up for that to happen, right? It means you're rushing your execution. And truth be told, it's not a long-term successful way to behave. Details are very, very important. And if we're not going to sanity check them before that happens, not good, right? If we don't know where we're going to lose money and we're confident that's exactly the point where we're going to lose, not good, right? If we don't know how much we're going to lose when we're wrong, not good. So, execution, operational mistakes happen, but they shouldn't. And they're the easiest thing to avoid by just creating the right muscle memory and by literally just sanity checking. So, okay, we're going to be back in potential business here for NQ, right? 5-minute time frame needs to break out and hold on increasing outlier volume above this 600 range. So 30 seconds to go here. It's got to close 5 points higher. This will be close. Ooh. What did we close at here? 99.50? That's mean. Okay, so I'm going to watch here again on this 3-minute time frame. We have a chance here. We need to hold above 607.75 at this point. Right, so above basically this resistance high. Okay, it doesn't look like it's going to hold. So maybe possibly interested here on this little ES breakdown. See if this thing can get to outlier volume. Little bit, yeah. Yeah, but I have no bearish bias on NQ, right, Craig? So, don't care. Right? NA, 3 out of 3 to the upside, so I'm not going to go short. Counter trend. I'm going to look for the easier setup here, right? Where I can go with the trending price action like I have on ES, right? So again, you should know that by now too. So we can't be tricking ourselves into looking at trades, right, that are counter plan just because we got a big volume profile or something along those lines, right? It's got to be what's the first setup that matches our daily plan, not what's the first setup that makes us feel like it's going to move. Right? As much as of what discipline is as a trader is behaving the way that you're saying you're going to behave without allowing new outside influences to trick you into doing otherwise, right? So I write my plan out here for a reason because it makes it really challenging for me to ignore my rules, right? Okay, if I'm looking for a breakout above, okay, I've got this scenario here. I know that I'm only going to be looking for bullish scenarios on bigger volume than yesterday. Well, I didn't get bigger volume than yesterday on ES to the upside, right? So no bull case. And then I know on NQ, it says NA, right, with only really bearish, with only bullish scenarios. So I'm unwilling to change that just because I see some short-term candle that's making it noisy, right? So make it easy to behave how you say you're going to behave. Make it easy to follow the rules of your system. And don't fall for the trick or the trap, right, of each increasing outlier volume candle. We're not trading outlier volume candles. We're trading our system that gets confirmed based on those volume profiles. We can't do things out of order because then we just set ourselves up to lose money. And again, I'm unwilling to tolerate that, right? It's a bad habit. We can't fall for that shit. Does that make sense, Craig? So guys, just to build off of that, right? I spend 30 minutes a day or in the mornings, right, planning out my trades with all of you here so that I can follow my plan and make it easy for me to not ignore my rules, right? If I was willing just to trade every outlier volume candle or every candle that feels good, I wouldn't spend that time doing it, right? All that prep. Right? So I'm not putting in that homework, not doing that analysis, not focusing on those details so that I can ignore them. So I feel like that's what I need to be doing on a daily basis, right? A decade into my trading career, and you think that, hey, I can just show up and make money, maybe that's a limiting belief that you need to change to overcome some of those barriers. Okay, so a high vol breakout over the 611, right, would be scenario that could be in play. That's increasing, but not outlier volume, right? So still no tradable opportunity. Kind of like what Rusty is saying, right? Kind of looks like it's a hug-in VWAP day. Not much really changing, right? No real separation above, no real separation below. And it's getting to that time of the morning where you're maybe not expecting to now get an outlier session, right? We're still in kind of the implied middle of the previous day's ranges. So maybe just looking like a day of consolidation here or a morning of consolidation. So we'll see if we get a story that maybe changes here quickly. But short term, right, okay, take your little base hit. Move on, right, and bring a fresh day of mental capital back in play tomorrow. We don't need to be in a rush. We don't need to force a decision. We don't need to put ourselves in situations that will make us break our rules. It's understanding that green days compound into green weeks, right? Green weeks turn into green months. Green months turn into 2 weeks notices to your boss, right? So every time I get comfortable cheating myself and get comfortable breaking a rule, all I do is elongate that learning curve and make it more challenging for me to actually get that long-term result. So like I said, right, it's that thing I will not tolerate, right? I will not tolerate self-sabotage because it is fundamentally us avoiding a variable we can't control. Okay, so maybe we could play this on the 15-minute time frame here. Let's see. We need to break out above 617.75 and then pull back right into that range. Stop loss would be 602.50. So again, right now we've got at least a couple minutes before this thing comes together. This is the opportunity to make sure that you're setting up your order window flawlessly, right? There should be no excuse to ever have some operational mistake. So first things first, right? Click buy, because we'd be looking for a buy order, then tick stop loss, and then tick price and set your price to be where you want it to be. So in this context, right, 2602.50. Might be lower than that in a second here. Okay. Right, now would be 594.75 or potentially, right, 563. Now a 563 stop loss would be suboptimal because the thesis here, right, is a breakout and hold above 600. So if now I have to see a deep pullback under 600, I'm no longer very optimistic that that's the thesis that's holding. So we'd like to see this basically relief bounce from here, right? And then we could go stop loss 590, right? 594, 592.50. But this is starting to look less and less likely here all of a sudden, right? Okay, so 86.75 now is the stop loss. Now we want to see a breakout up and over, right? Previous high of day or previous high of that confirmation candle. So we want to see a breakout above 618. So now you can set your limit price, right, to be 618 and check if your position sizing is within a reasonable target. Well, if your stop loss is 586.75 and your entry price is 2618, you'd be risking $625 per contract, right? Which is more than one would be willing to accept as a reasonable loss. So you need to see a pullback, right, into maybe like 612. Okay, 611.75 would be $500 on the dot. So now, right, I can have my entire order window set up and good to go. And I know that at a stop loss at 586.75, I can buy one contract if I get an entry below 611.75 after I get a breakout and pullback above 617.75. So now I've got 10 minutes, 15 minutes, 20 minutes, right? I can basically wait on this order window. And I have zero excuses to need to rush this as we creep up closer towards entry time, right? So if that isn't your process every single time with your entry, you're waiting to set it up, you're rushing to set it up, and all you're doing, right, is putting yourself in a scenario or situation where it's easy to make an operational mistake. And then when you make an operational mistake on a trade that goes without you, right, that stops you out because you had the wrong stop loss or closes you early, right, and costs you money or do whatever, all you're doing is putting yourself on tilt, right? That's all that happens. Makes you feel like, oh, I was owed a bigger win, or I was owed this reaction, or I was owed XYZ. And now, instead of trading your process, right, you're trading to make back that P&L and feel as if you got what you deserved. When in reality, right, that lack of preparation actually gave you what you deserved, right? By being, by rushing, right, that order window, by rushing that entry process, by not double checking those stop losses. The market is just giving you or punishing you for sloppy behavior, right? Through sloppy activity. So although you feel as if you were owed a certain win, your process and your technique there is indicating that you're most likely to make a mistake, right? And so then instead of getting a reward for double checking and to make sure that you're not making that mistake, you're rushing that process and making it more likely for that to happen. And the market is always going to punish you in the path of least resistance or reward you in the path of least resistance. And we're always going to trick ourselves into thinking that that isn't the case, right? And then that's when you go on tilt, you get that out of body experience. You chase a P&L, not a process, and you set yourself up to struggle. Okay, at this point, right, probably uninterested in any NQ trade, right, at least on that time frame. Because now the pullback that I have to get to start to justify that position sizing, right, a little bit unlikely. So now I need to see a breakout, right, above 617 or 618.50. And then I need to see a pullback that is as equivalent or as large as the difference between my stop loss and my ideal entry price, right? Arguably, I need to see a bigger pullback than my stop loss now, right? So stop loss would have to be 81. An entry at 600, be risking 19 points. So 19 times 20 is 480. Right? Is that correct? So if I want to be risking 500 bucks or less and I need to survive that deep of a pullback, not feeling great about that, right? The pullback I need to see from the highs to my entry zone is larger than the difference between my stop loss, then it doesn't really feel weak, right? So Antonin, you were asking earlier the speed at which, right? It's not really necessarily a speed thing. It's how far has it come, right? Relative to stop loss. How big is the difference? And the sooner, right, I start mapping out my order window entry, the sooner I'm defining what those variables are, easier it is for me to put two and two together, right? In general, kind of just looks like a chop day. Don't see many reasons to be more aggressive than this. But details are very important, and if we choose to ignore them, good luck. Does that make sense to everyone? talk about all the time, right? Hold ourselves to a standard that would make most people feel uncomfortable. That's what's required to be able to win in this game. And so when most people rush, you slow down. When most people ignore stop losses, you define where you're wrong. Where most people want to get greedy with their P&L, right? And they think it's going to run forever. You pick your target and close it there. If most people are going to rush their order entry process and get emotional with that timing, you can sit on your order window for 15 minutes right before you click submit. When most people enter the trade at the first time it feels like it's good, you enter on the second time, right? When most people are willing to ignore their risk-reward ratios, if you want to be profitable, you filter out trades that ignore your risk-reward parameters. So I can guarantee that if you track the habits, right, that have consistently cost you money, and then basically do the total opposite of them, you will be a lot closer to profitable than where you were before. And that's unfortunately the reality for most traders, Derek, right? Is it's more fun to rush and to do things impulsively and to give up that control than it is to be deliberate and specific, right? And to delay that gratification. But when we try to chase that short-term feeling or that short-term win, pretty much always comes back and slaps us in the face. When you make money by breaking a rule, you're pretty much guaranteed to give back double whatever you just made on the next trade or the trade after that or whatever it is, right? I can't think of many exceptions to that. Yeah, every time. Like the most dangerous trade is not a trade where you lost money. It's where you made money by basically impulsively trading. The single most dangerous trade you can take. There's a possible chance here with this crude. We need quite a bit more volume here still. We need to get up and over that outlier standard, which it looks like it's probably going to struggle to do. So my bias here would be to play crude at this point. It's the best looking volume profile, best, cleanest setup. So let's see how this candle can close here. Yeah, profitable trading should feel not boring, but it should feel monotonous, right? Like, we're not trying to reward or chase a feeling. We're just following the trail, right? We're following the path. We're not willing to basically ignore any of those steps in between. Okay, so target here would be 68.50. Stop loss 67.99. Not enough volume, right, on ES here. It's not outlier, so that's why I have no interest. So you'd be looking at approximately a 13-cent stop loss, right? So you could buy, maybe 4 contracts, 5 contracts on the right pullback here. Let's see how this behaves. That's moving down too quickly here so far. ES on the 3-min now starting to give us some of that outlier volume. So let's see if it can sustain. So I'm watching that on a separate screen here. It's 11 o'clock, so maybe the time of day. Maybe that volume is more capitulation than continuation. Right? It's been a choppy session here so far without really any sustained follow through. And you're historically getting into a time of day where markets don't make higher highs or make lower lows. So obviously doesn't mean it can't happen, but just means that it's challenging to think that it necessarily will. Okay, let's see how we defend this 68 handle here. Again, no reason to have entered this position yet. Okay, it's been invalidated, right? On the 5-min time frame. Maybe you could play this on the 10. But that would be that same story we talked about there with NQ, where if our thesis is a basically breakout above 68, and then now the pullback, right, is significantly below 68, you're less enthusiastic about that being a sign of relative enthusiasm. Okay, so let's watch ES here. So now, right, we have the appropriate volume standard, biggest volume since 936. So let's watch. Stop loss would have to be, at this point, 58.70. So again, first thing I tick, stop loss on my order window, set my price to be 58.70. Then next, right, set my price to be the bid. And let's watch how this price action behaves and moves. As is, I could buy 4 contracts, right? And still be within my max loss number. So that would be the sizing I would be looking for here. Okay, we care about the correct reaction here. If this thing doesn't give me the move here on the 3, well, we have also a possible setup trigger here on the 5. All right, and now it's possibly faking out. So stop loss would have to be 871. 871.50. And it's feeling more and more like that possible capitulation scenario, right? So if we make lower lows, those lower lows bounce, right? And then we literally bounced off of just above low of day. Doesn't feel like a particularly strong reaction from bears, right? So then pair that with the time of day context clue that we talked about 2 minutes ago, and we're kind of getting that reaction that indicates, hey, this isn't actually a strong trend to the downside here. Maybe this is a mean reversion setup. Right, and if that's the case, then maybe that's more NQ than ES. So again, right? Slow down our process. We defined our execution criteria, and we avoided what would have been a frustrating loss, right? And it never got particularly close to being an entry. Not really. Again, if we get a setup here on a longer time frame, then sure, we have another opportunity here to target a move towards that 850 handle. But so far, not a tremendous amount of enthusiasm lower. So why rush it, right? So again, right, being deliberate, being specific, right, forcing yourself to slow down is ultimately a P&L cheat code, because you tend to make mistakes when you're rushing and you tend to avoid them when you're not, right? Simple as. And all the evidence I have in my own personal trading is that every time I rush a decision, I tend to lose money, right? Every time I wait to make a decision that feels longer than I should have to wait, I tend to do pretty well. So in general, the market will punish you when you're in a rush to make money, and it will reward you when you're willing to delay that gratification. Not every day is going to be a monster win, but certainly not every day needs to be a max loss. And so by being more deliberate with our basic decisions, the more and more we start to avoid our obvious mistakes. And when we start to avoid our obvious mistakes, we stop putting ourselves on tilt. And when we stop putting ourselves on tilt, we stop blowing our accounts. It takes a lot of suffering and abuse from the market to lose your cool when you manage your risk, when you trade your A+ setup. Like, you have to get your butt kicked a lot, right? And you have to deal with like 6 or 7 losses in a row, right? 5 or 6 red days in a row. It's pretty rare to get that type of distribution of results regardless. But when you behave as if you're one trade away from losing control, then you are inevitably going to lose it, right? It's borderline guaranteed. And I'm sure I've said this before, and I'll say this again, but there is no natural talent in trading, right? There are no naturally talented traders. It doesn't exist. It's an oxymoron. So when you catch yourself feeling as if, oh, I see the market really well, or like I'm hot today, or whatever it is, you're just dealing with random variance, not reality. And the more that you start to believe that random variance is a result of a tremendous amount of skill, and the closer you are, right, to blowing up again. So I'll give this a few more minutes here, see if these 15-minute candles can fill out or either give us a reversal print. But it's kind of seeming like it's just going to be a chopped day. And I'm not super motivated to drain my mental capital chasing that. Rather take a small green day, move on, reset, keep stacking up the win streak, and come back fresh tomorrow, right? That's more valuable to me than turning this $150 day into a $1,500 day. So I'm willing to delay that gratification. I'm willing to accept the result of my process regardless, right? Accept the result of my process regardless if it's as big as I want, as little as I want. Because I'm not judging my self-worth or my ability as a trader based on a single day's results, right? Now, if something sets up that matches all my criterias and all my rules, then I will trade it without any discrimination. But I will not make a decision that is influenced by my P&L here, unless it's one based on managing risk. What was our original entry price on our NQ? It was like 68. Right? So if we look at NQ from our original entry price here, it's not moved, right? We're at 64 now. So all things considered, we've really not missed anything here yet. Now, we've got some possible reversal setups, right? Little double bottom bounces. If I can get close up above 575, we're back in business. If not, I will walk away and enjoy my morning. And ES, right, we can't play this reversal for two reasons. One, not outlier volume. And the standard we set for any bullish trade here today, bigger bull vol than yesterday. That certainly isn't the case, right? So objectively, can't do that. So again, today we should be proud of ourselves for navigating a relatively choppy market. Took our little base hit. Didn't get emotionally attached to our thesis, right? And played the price action that was in front of us, not the price action that we felt we deserved. Not every day is going to be a monster, but every day where you commit and reward yourself for following your rules and don't judge that reward based on your P&L, the sooner you are or the closer you are to actually achieving that P&L objective that you're craving. So it's ignoring your P&L in the short term, right? Not allowing that to influence you. That creates the P&L that you want in the long term. And yeah, okay, today I maybe could have made 500 bucks instead of 150. But the difference between $350 at the end of the year, it's less than a cup of coffee, right? Less than a cup of coffee a day, I should say, right? So to feel bad about that is cheating myself of the opportunity to follow my process. So all in all here, team, I'm going to wrap it up for the day. I don't see any reason to place any further trades. And just keep the win streak going, right? Nice work, Patrick. All right, so here's my journal entry. Non-news day here today without any movement in the markets. Played NQ on a reversal thesis from 25.68 with one contract. Entry felt early and got within 2 points of my stop loss price of 25.51. Did not get stopped out and then price bounced towards 25.80. The post entry candle was on decreasing volume and I felt in the moment as if that was a bad sign after an early entry price. Price then rejected under 2600 at 25.94-ish and then sold off under 25.80. I closed the trade protecting a small win. Although this wasn't a mega win, I followed the price action clues well here. Bad entries showed me the warning signs, the decreasing volume told me to get out, and the pullback under 580 confirmed the lack of momentum. If I trade like this every single day, I'll be a very rich man. Proud of this behavior here today. So again, right? Rewarding myself for the quality of my process, not the quality of my result. And a good example of that here today. Something is wrong here. Sorry, I just forgot Fridays. Yeah, makes sense. So any questions here, team? Any questions here? Again, not missed out on anything today. Not missed out on a peep. So final call for questions here, team. Final call for questions. Sounds good, Kenneth. Enjoy your day, man. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Otherwise, looking forward to catching up with a few of you here in our one-on-ones later this afternoon, and we'll chat then. So have yourselves a great day. We'll see you all inside the live stream tomorrow, and let's keep stacking them up and taking advantage of whatever volatility the market wants to give us. Talk soon, team. Peace.